When discussing Tesla, many quickly associate it with cutting-edge electric vehicles and the renowned Elon Musk. However, a less publicized piece of information is that Elon is not the original founder. In fact, the authentic founders ended up taking a back seat in the company's historical context. It's impressive to think that Tesla, with only a 17-year existence, holds a market value 4 times higher than Ford, which has a history spanning 117 years. And this is the case even though Tesla sells a significantly smaller quantity of vehicles. The emergence and growth of Tesla are not merely intriguing for car enthusiasts. The trajectory of this giant offers a profound insight into successful business strategies and glimpses of what the future of human mobility might be. Chapter 1: In the early days. The trajectory of Tesla cannot be understood without an analysis of the previous context of electric cars. Join me in the 90s. In 1997, GM introduced a name to the world, the EV1, a pioneer in mass-produced electric cars. This vehicle was different. Offered only for leasing, it was available in specific locations, such as Arizona and California. For GM, it was a learning period, a chance to test the market. However, electric vehicles were not an invention of that time. Let's go back to the 18th century. Imagine carriages not powered by horses but by electric energy. However, gasoline soon took the spotlight, pointing in a new direction for the automotive industry. The EV1, even though innovative, was not perfect. It faced issues: limited range, slow charging, and a maximum speed of 120 kilometers per hour. Moreover, its bold design did not please everyone. Some saw the EV1 as a window to the future, appreciating its innovative character. However, the average American consumer, accustomed to power and size, remained skeptical. The clock advances to 99. GM makes a drastic decision to cease production of the EV1. Why? Between 2003 and 2004, all leased models were returned and destroyed. GM's verdict? The EV1 was expensive, both in production and maintenance. However, rumors circulated. Some whispered about external pressures, specifically from the oil industry. While the drama of the EV1 unfolded, 2 visionary minds observed, Martin Eberhard and Marco Tarpenning. These Silicon Valley engineers were no strangers to success. In '97, the year of the EV1's launch, they founded an e-reader company. This decision proved to be correct. 2 years later, 20,000 devices had been sold. In 2000, a milestone, the company sailed for $187 million. 2003 marks another beginning. The duo decides to found Tesla. Their eyes were set on overcoming perceived flaws in previous electric cars. They dreamed big, an electric car that outperformed gasoline vehicles in every aspect. The first piece of this puzzle? Lithium batteries. They had previous experience with this technology and saw its potential. But assembling an automotive company is no easy task. Even for those with resources, the path is filled with obstacles. Then, partnership opportunities arose. First, AC propulsion, created by engineers who had already delved into the electric world. They didn't produce cars but developed electrical components. They brought to the project a vehicle called the T0, an innovative electric car that caught the duo's attention. However, a car design was still needed. Here comes Lotus, with its long British tradition. Tesla saw potential in the Lotus Elise, an icon in the automotive world, and decided to adapt it. The prototype was a success. However, transitioning from a prototype model to a complete production line is challenging. And there was still an obstacle: capital. Mass production required an investment that Tesla did not yet possess. Chapter 2: Post-acquisition. Elon Musk, after a lucrative sale of PayPal, found himself financially comfortable and with free time. In 2004, he decided to invest part of that money, specifically $7.5 million, in Tesla, an electric car company. With this, he not only invested but also took on the position of chairman of the board. His influence on Tesla was quickly noticed. Musk envisioned a future where electric cars would not only be a niche market but a mainstream option. He understood that the public, in general, needed to be convinced of two things about electric cars: they could be aesthetically pleasing and could be efficient and fast. However, Musk was clear that mass production of affordable electric cars would not be an immediate achievement. As an initial strategic step, he focused on the production of electric sports cars. These, besides being attractive, had a higher profit margin. This approach made Tesla attractive to investors and allowed the company to raise funds with lower production volumes. Still in 2004, the Tesla team presented a prototype, affectionately nicknamed the Mule. The strategy seemed simple and effective: take an existing technology and integrate it into a ready-made car. However, reality proved to be more complicated. Musk, in a conversation with Forbes, highlighted two critical challenges they faced. First, the technology from AC propulsion, which they considered using, was not suitable for large-scale production. Second, when trying to incorporate the electric motor and batteries into the Lotus Elise model, the car became 30% heavier. This weight change led to an almost complete redesign, resulting in a car that retained less than 7% of its original parts. In 2006, the result of this effort emerged: the Tesla Roadster. This vehicle, with its 288 horsepower, was impressive, going from 0 to 100 kilometers per hour in just 4 seconds and offering a range of nearly 400 kilometers. It was a revolutionary machine and, with a price of $100,000, proved to be an immediate success. Quickly, 127 units were sold, with deliveries scheduled for 2008. However, 2007 brought controversial changes to the company, showing that innovations are not always linear or free of challenges. Chapter 3: Controversies. Martin Eberhard, founder and CEO, was ousted in a board meeting. He was not invited to it. He was demoted to Chief Technology Officer, suggesting that he only observe. In 2007, Michael Marks became the interim CEO. In January 2008, Eberhard and Tarpenning, the founders, left. Zeev Drory became the new CEO of Tesla. In 2007, expectations were high for the company. Investors like Larry Page and Sergey Brin, co-founders of Google, invested. However, an unforeseen event was on the horizon. Chapter 4: Crisis. In 2008, the global financial crisis hit, leading Tesla to lay off 10% of its employees, including company veterans. In October of the same year, Elon Musk took over as CEO and, aiming for financial stability, laid off another 25% of the workforce. By January 2009, Tesla managed to raise $187 million. Surprisingly, $70 million came directly from Musk. During this period, they also delivered 147 Tesla Roadsters, previously sold. In June 2009, good news arrived. Tesla received a U.S. government incentive worth $465 million. This incentive was part of a program to boost the production of fuel-efficient cars, aiming to reduce dependence on external oil. It's worth noting that this incentive is different from the financial bailout that companies like GM and Chrysler received. These major automakers were not even eligible for the incentive due to their financial instability. With the acquired funds, Tesla could move forward. They launched the Model S, a more affordable sedan, and invested in the development of motors and parts for electric vehicles destined for the market. Chapter 5: All Public. In 2010, Tesla took a significant step by being listed on NASDAQ, the famous American stock exchange. This achievement stands out when considering that, since 1956, with Ford, no other automaker had achieved such merit. It's important to remember that Tesla had only been operating for 7 years. With its initial public offering, selling 13.3 million shares at $17 each, the company raised an impressive $226 million. There was a moment when Elon Musk considered selling Tesla to Google for $11 billion. However, production adjustments and a boost in sales led the company to close the quarter with a profit, making the proposal unnecessary. The question arises, if Google had acquired Tesla, how would the situation be today? Although Google has financial strength, would they possess the same vision and determination as Musk? A significant advantage of electric cars over traditional ones is the low cost of fuel. However, the challenge lies in the price of lithium batteries. In 2013, Musk introduced the idea of the Gigafactory, aiming to lower the cost of batteries through mass production. In 2016, the first of these factories started operating in Nevada, USA. Today, there are others, including in China. Tesla's mission, as indicated on its website, goes beyond producing electric vehicles. The brand aims to accelerate the transition to renewable energies. In this context, Tesla acquired SolarCity, a leader in solar panel installations in the United States. Another innovation is the supercharger network. These are ultra-fast chargers, and yes, they are free for Tesla owners. Currently, there are more than 16,000 spread across North America, Europe, and Asia. They charge batteries in about half an hour, and, reinforcing, they are free and forever. Tesla plays a pioneering role in the electric car market. There are records of cars like the EV1 in California, produced by legal mandate to reduce pollution. However, Tesla emerged in the market not by mandate but by truly believing in the cause. The superchargers, besides being a free service for Tesla users, are a brilliant strategy. By creating a charging infrastructure, Tesla not only serves its customers but also encourages other automakers to produce electric vehicles. In the future, this infrastructure could be a source of profit by renting it to electric cars from other brands. Chapter 6: The Model 3. In 2016, the Model 3, Elon Musk's dream realization, was launched. This Tesla standard vehicle was created to be affordable for everyone. In the first week alone, they surprised with the sale of 325,000 units. However, in 2017, according to Bloomberg, the company was spending about $8,000 per minute in preparation for the delivery of this model, whose production started in July of that year. The expansion did not stop there. In addition to the Roadster, Model S, and Model 3, in 2015, Tesla introduced the Model X, an SUV, with prices ranging from $80,000 to $120,000. And in 2020, they launched the Model Y, a compact utility vehicle, with prices starting between $30,000 and $40,000. Before the pandemic, in 2019, Tesla boasted a market value of $93 billion, surpassing GM and Ford combined. Remarkably, GM sold 20 times more cars, and Ford 6 times more than Tesla that year. Tesla's impressive market value is not tied to sales but to its vision for the future. While the automotive industry stagnated, electric cars are becoming more accessible. governments encourage their adoption. Tesla already works with self-driving systems, and any advances are updated via software. Thus, there is no need to purchase a newer model or visit a store. In 2008, many automakers needed financial rescue. Tesla, despite being affected, adapted quickly. Against expectations, it attracted investors even in challenging economic periods. A reflection I found in my research is that innovating and doing better can thrive even in the most adverse scenarios. While traditional automakers repeat processes from 100 years ago, Tesla proves that innovation is viable and necessary. Now, we ask ourselves, what is Tesla's next step? What else can it surprise us with? Chapter 7: The Terminator Future? Let's recall Tesla's plan in 2006. Start with the Roadster, a sports car, and fund more affordable cars like the S and the X. With the profits, create the 3 and the Y, and simultaneously develop clean energy, represented by Solar City. In 2016, the Master Plan Part 2 emerged. First, develop solar roofs integrated with energy storage. Second, diversify the line of electric vehicles for all industry segments. Third, create cars 10 times safer with autonomous driving. Fourth, allow your vehicle to generate income when not in use. Recently, the Cybertruck and the Semi, an electric truck, were presented to the public. With them, Tesla targets the business sector, serving companies looking to reduce fuel and maintenance costs. Imagine a truck and a pickup with tax incentives, almost free fuel, and future self-driving capability? For me, the decision is clear. Who will benefit more, the business owner with economical autonomous vehicles or Tesla investors with a broad customer base? Tesla's trajectory reveals that it is possible to innovate in consolidated markets. Although Elon Musk is not the original founder of Tesla, his vision and experience have elevated the company from a promising concept to a powerhouse in the automotive sector. Starting with luxury cars, more profitable, and then funding more affordable models, expanding production through the Gigafactory is a strategy worthy of study. Now, if you're curious about Tesla and want to discover their first flying car, click on the video playing on your screen and find out how that was possible. Also, if you enjoyed this video, don't forget to give it a like and subscribe to the channel, activating notifications, because I post new videos every day. See you in the next one.